Well, good afternoon, everybody. This is Matador again. It's still May 14th, and it's about 4:15 p.m. Eastern Standard Time. And we actually ran up right to our target that we talked about at lunch today. So not surprising that we were able to test this $90 mark, the very, very beginning of that gap fill, plus a few pennies. I think the high was 90.12. So a nice run up, just as we were talking about, stopped, made a nice equal swing high here. Alright, that's the first, I would say, test again of this area on the gap down. And then we sort of paired losses, and you can read that again in Yahoo Finance. Stocks pair gains in late trade due to some of these news events. One of the biggest ones is right in here, this worse than expected weekly unemployment report. So that's something to contend with, and that's why we had a little bit of a sell-off here late in the day. If you look at the trends, however, let's grab those. They didn't really pop too much. They stayed right about flat, and the trend Q also very nicely flat in here. So even with the sell-off, there's not a lot of volume behind it. The VIX kind of bled out all day long, which we were watching as well. And now we actually have a descending triangle in here in the VIX. So a move up tomorrow is possible. Again, a lot of hours between now and tomorrow. What I would like to see, of course, would be, if I go to a different time frame, a move back up into the $90 mark. All right, test that a few times, and then work our way into this 90-91 area, which is this perfect gap. And then we're going to have 92-93, like we said before. So a lot of overhead resistance. Ultimately, a nice high base consolidation in here, and looking for a breakout above the 200 MA. But again, if something happens or whatever, we could be heading south. I just want to mark that next swing low wherever it occurs. If it's right here, that's great. And that, again, that would be a high base in the context of this last run up. If it's down here, of course, we're going to mark that at the 50 MA wherever it occurs. And now you can see why we got this bounce off the 50 MA. Again, a high base consolidation into the 50 MA here, and the 50% retracement, I should say, and the $100 mark. So again, a lot of overhead resistance. People know that. A lot of buying power is lost because of that in some ways. And you just have to watch what other people are doing around you and take action only when it makes sense. And that's the game. So anyway, very good day. Everything matched up beautifully. We played it very well, and I hope you guys were able to capitalize on some of that. And your comments, again, very, very well received. Add anything else, and we'll talk about it. A good example of that is right here. GANARE asked a question in yesterday's comments. When drawing support and resistance lines, is it more powerful to use either the open or closed values or the shadows high and low? For example, when drawing a resistance trend line through a congestion area, I get different results if I use the top of the candles versus the top of the shadows. And not to be too obtuse, but the answer to that is yes. So let me give you an example, and that'll help clear it up. If I'm looking at a daily chart, for instance, let's take today, actually. So if I was going to fine-tune this chart, right, on a daily chart, I can see there's a gap here. I can even see there's a lower shadow here. So do I consider that lower shadow to be a value? Would I draw a trend line using it, or would I use the real body? The only way to do that is to say, all right, well, here's today, yesterday, and 2 days ago. So I would mark this day on a daily chart, and then go and fine-tune this bar, this candlestick, and go look intraday. So let's go do that together. Is this lower shadow significant? Am I going to include it in my daily chart analysis and my trend line drawing? All right, so let's go look. 15-minute chart or so. So here's 1 day, 2 days, 3 days ago. We know the market opened right here. Let me zoom in a little bit. Sold off and then came rallying all the way back up to test that before selling off a little bit at the close. So now we know what the intraday action was. It was fairly significant. This long lower shadow, there's a lot of trades that occurred there. It wasn't just one blip, come back up and trade up here all day long, was it? No, it was a huge sell-off most of the day, and a big rally back up. So that means that, to me, is very significant. This $90 mark, that was part of why that $90 mark was there for me. In the 89.88, 90 area, right? So here we are. That, to me, is significant. On a daily chart, I go back and look and I say, I'm going to include this long lower shadow in every analysis that I do. So if I was going to be drawing a trend line, I would try to include that long lower shadow because I know that there were a lot of trades that occurred right in here. Alright, in the former scenario, let's say this long lower shadow on this day opened where it did, sold off dramatically, and then came all the way back up within 5 minutes and was trading up here all day long. In that scenario, I would disregard this longer lower shadow on a higher time frame and only use the real body then as my support, resistance, or trend line drawing area. And again, that to me is fine-tuning a chart. You can do the same thing on a higher time frame like a weekly chart. Let's take a big long shadow on a weekly chart. So 1, 2, 3, 4 weeks ago. I want to know if this long lower shadow is worth anything right here. You guys see that? Let me just zoom out and scoot over. This guy right here. So I have to go back and look at this long and lower shadow. So mark the date. 4/24 is the week. It won't be as easy to do that, but here is 4/24 area. So now I know that this right here, big sell-off, comes back up. This low right here, this 82.79 area, to me is significant. There really was a sell-off that occurred there. In fact, it occurred into resistance. Once broken, becomes support. So I mark 82.79. I come back over here, and 82.79, right there. It's the same line. That long lower shadow to me is significant. I include it. Once again, if this was a blip and it comes right back up and it trades up here for the whole day after day after day in a very high, tight base consolidation, then I disregard that lower shadow by X%, and I would do the same thing on a higher time frame, and this bar would be raised to here. Isn't that cool? All right. Same thing for trend lines. I would disregard that area if I was going to draw trend lines. So that's kind of a long answer again to a seemingly short question, but it's pretty deep. And it's even deeper than all that, if I am being honest. That to me is just a very, very cursory explanation of that fine-tuning action. And when you get really good at reading charts, these things make more and more and more sense, and you can get better at sort of telling where the price has a chance of going to. Not that you're always going to be right, but you're going to start stacking the odds in your favor. And again, that's what we're looking for as we decide to or decide not to put money on the table going forward. So very good. Thanks for being with us here, and thanks for listening. And if I didn't answer your question good enough, let me know. If I did answer your question good enough, you can let me know that too. And good job, everybody. So I'll be talking at you. I hope you have a great rest of the night, and I'll talk to you soon.